Hi everyone, this is Rob Roy and welcome to the Elliott Wave Options U.S. Market Update. Well, Bitcoin continues this impulse move to the upside, and as we discussed in the last recording, is testing the all-time highs. It's on the expectation that we're going to have a Bitcoin futures ETF begin trading next week. Interest rates have calmed down, consolidating a bit, and the market gapped up on Thursday and Friday, creating a confusing pattern to some, but we may be setting up a very classic Elliott Wave pattern. Let's take a look at the charts. At the time of this recording, it is 8 p.m. on Saturday evening, so obviously the futures market is closed. Taking a look at the charts, you can see that with this move to the upside towards the end of the week, kind of makes the chart look a little discombobulated. But let's see if we can straighten this out a little bit. We still have this qualified zigzag to the downside that we've talked about over the past couple of weeks, but with what's occurred towards the end of the week, we now have a qualified upward zigzag as well. So you might be thinking, well, how can you have a downward zigzag and an upward zigzag both qualified at the same time? This is where people say, this Elliott Wave stuff just covers both sides. Not necessarily. In fact, this may be a very classic Elliott Wave pattern that's in formation, following all the rules. So let's do a little Elliott Wave education, if you will. The process of forming a triangle. The way a triangle is formed is you have the completion of a previous impulse pattern. That becomes the 0 point. And from there, we have a complex move to the downside, a 3-segment move, which is the A wave. Now, at this point in time, you obviously don't know that you might be forming a triangle. Really impossible to tell. You could be forming a flat as well. But if from here we have a B wave that moves to the upside in a 3-wave zigzag pattern, and a C wave that does the same, now you can start to see that potentially a triangle is forming. Now from here, if you drew just a plain old basic trend channel from that 0 point through the B, and then drew another trend channel from A through C, now from a visual standpoint, you can start to see the formation of the triangle. Well, what happens now? Well, if a triangle is forming, what should occur is another move back to the upside, which is the D segment. But we don't exceed that B point. So keeping that trend line of the lower highs intact. Then we have the E segment that moves to the downside, again, not exceeding the C level, keeping that lower trend line of higher lows intact as well. From that point, we get what Elliott termed a thrust, a vertical breakout move. Now, in the illustration here, it's showing a move to the upside, but I want to highlight or emphasize that that move could be to the upside or the downside. Triangle patterns can break either direction. So let's go back to look at the chart and see if this may start to make some sense. So here's where the market is. Well, if we start from where that wave 5 ended, and we create this zigzag pattern, which we already know is in place, and then we start to label it as we just went through in our education, with this being the 0 point, and the completion of that initial zigzag being A. Well, then we have the next zigzag that moved back to the upside, 3-wave segment as well. And if that's the completion of it, which would make sense, right, with both of those gaps, and we're above that 10-day moving average, so we're overbought, so it would make a lot of sense that this may very well end here and create the B wave within that Elliott Wave pattern. And then you know what's likely to happen from here. We can already start to see the possibility of the trend lines being drawn and creating some sort of a triangle pattern. It makes sense. We really pride ourselves on our education at Elliott Wave Options. In fact, if you found that informative, all you have to do is sign up for Trade Finder. It's free. You can use the link underneath this video or go to our website at ewotrader.com. But we're going to give you the first segment of our Elliott Wave core class, which is where that education came from, completely for free. So it doesn't cost you anything. You sign up for Trade Finder, that's free, and then you get the Elliott Wave education, the first segment, for free as well. gives you a chance to kind of kick the tires at what we do from an educational standpoint at Elliott Wave Options. I think you'll find it informative. Now, going back to the rest of the market, taking a look at interest rates. I said in the intro that interest rates had consolidated. Look at that. They're forming a triangle as well. So are we going to break to the upside here on rates? I think that the rates have given us a little bit of a pause, and that's allowed the market to move back to the upside. I don't think it has anything to do with anything other than the break in interest rates. You've heard me many times say that where interest rates go, I think is going to determine where the equities markets move from here. But isn't it interesting, the financial information that has come out over this past week? The CPI, once again, showing that inflation is higher than expected. Now, people are starting to question the Federal Reserve on this whole transitory thing. You've heard me talk about it numerous times. But here's what Bob Dole, who's a noted investment manager, had to say. One more data point to say, Fed, you're trying to convince us that inflation is transitory. It's just not believable. If you know anybody that doesn't live somewhere, eat food, doesn't use energy, then inflation is maybe not a particular problem. But come on. So people are starting to call the Federal Reserve out on this whole transitory thing. So my point is, can the market move significantly higher from here with this kind of information going on? I think it goes back to the fact that the market may very well be going through a consolidation phase. I think it makes a lot of sense. We also talked in the intro about Bitcoin's move to the upside, expectation that we're going to have a Bitcoin futures ETF begin trading this week. And look at that. Look at the completion of this zigzag. See why we just talked to you about zigzags in the formation of even another corrective pattern? They're everywhere if you really start to pay attention and learn about them. We just completed one of the most classic zigzag patterns to the upside you could ever see. In fact, Elliott Wave has been nailing Bitcoin for the entire year. So there's the move right back up. We talked about how could we go up and test these previous highs. So now the question becomes, do we make new highs? We're a bit overextended at this point in time. You can see there's the 10-day moving average. Say it with me, no security in any time frame gets too far away from its 10-day moving average. And at the time of this recording, we have backed off just a little bit, but holding a good part of those gains moving higher. But that could be a buy the rumor, sell the news type thing. In other words, perhaps we get a little bit of consolidation right here under the all-time highs on Bitcoin. We'll see how that plays out. I was asked to take a look at gold. You can see we still have a 5-wave impulse pattern that's qualified to the downside. It was impressive to see the market break above this 165 area, but there's more resistance up here at 170. But that's not what you want to see if you're going to run up and tackle a new point of resistance to completely reverse and come back down to support. Now, an argument could be made, well, maybe we're just testing support. 165 had been resistance, and maybe we're testing support. But at this point in time, we still have to appreciate the fact that that downward zigzag, that downward impulse pattern is still in play, and we could make a new low in gold. A break above 170, taking out that previous wave 4, that would change things in the terms of gold. Now, we've been talking about the Russell a lot in our Trade Finder webinars, and that's on Tuesday night, by the way. So if you sign up for it, it's Tuesday night at 9 o'clock. We talk about the market. We look for trade ideas. A lot of people have been asking about the IWM, the Russell, and we've talked for the entire year, basically, about how we've stayed in this trading range here between 210 and 230 on the Russell, and then we had a triangle formation here within the trading range, and we've broken to the upside. However, we didn't get a follow-through day on Friday. So that brings the breakout into question. Is this a legitimate breakout? Sometimes you get head fakes on those breakouts. But we could be getting that thrust type pattern that Elliott talked about out of it as well. We're just going to have to wait till next week to see what plays out when we talk about the IWM. One sector that's been doing really well is energy. Look at the XLE. This vertical move to the upside here in the XLE. Thought I'd also show you a screenshot. This is our trade listing for all of our alert subscribers within Elliott Wave Options. And even though we may be moving into a corrective triangle, consolidating triangle within the market in general, energy has been moving to the upside, and look where we are. So we've had multiple trades here on natural gas and oil. So there's a couple of USO trades that we closed out. We've got a couple that are open. There's a couple back-to-back trades on natural gas that we closed and made gains on. So we're trading directionally in the area of where the market's moving, even though we may be moving into some sort of a consolidation phase within the market itself. We'll see. I did want to show you the Nifty because we had talked so much about that. There was some information on financial networks that India was in trouble. They weren't going to be able to handle what was going on economically around the world. Well, that didn't turn out to be true. We said that as long as India stayed above, or the Nifty stayed above 49, you had to stay long. And we had this triangle here, what we've just talked about as far as the market itself, form right above that consolidation area on the Nifty, and there's your thrust breakout to the upside there. A little bit overbought on Thursday's trade, so pulled back a little bit, and we're still just a tiny bit overbought, but you can see that thrust type of a breakout, so the Nifty still remains strong. Well, still have to stay long that, so I think Elliott Wave was pretty spot on there as well. And last but not least, let's go back to the VIX, because now it's really interesting. It would make sense, wouldn't it, that if the market is going to go into a consolidating triangle pattern here, and we're at the upper trend line, meaning we should back off, and you know how I feel about those gaps that exist and the likelihood that we're going to close these gaps possibly sooner rather than later, then maybe we just get smaller bounces off this support level at 16, create a little bit of a buffer here on the VIX to allow for that thrust breakout of this consolidating triangle that is likely occurring within the markets. Hope you found that informative and educational. Look forward to talking to you again next time. Have a great week. Take care, everybody. If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.